following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. One day left before our glorious 3-day weekend. And remember, there's a lot of people hitting the exit button on the trading floors and money managers and things like that. They seem to ease into these holidays a little earlier than most folks that have to go to work every day. So that's where we're at. I was checking my Chuck Norris workout video over there. And, you know, that means that you're going to have possibly some herky-jerky movements in price action on a lot of, you know, a lot of different instruments out there. Namely, you know, a lot of these, I mean, 60% of the market right now, I believe, is considered to be fully automated on algorithms. So, you know, a lot of those are going to not have the volume, not have the conviction, if you will, a lot of times to, you know, trade. I mean, a lot of times those systems are turned off on situations like this is what I'm trying to say. So there's going to be some weird movements. You may have some false movements. So just be aware of those. A lot of times, you know, I know a broker doesn't want to hear this right now or a clearing firm, but it might be better to trade extremely light and possibly even just full-time sit on the sidelines. So, and if you're noticing some of the construction we've been having back here, we're building a UFC deathmatch rink for family outings. So that's going to continue to, you know, when relatives come over, we're going to, you know, see what everybody's made of. So as we look at the 10-year, I'm just kidding, guys. As we look at the 10-year, what we want to do is we you know, this is the December contract, that 127.11.12. That's still a big number for me, and I still think we're going to probably just kind of sit around here possibly and move north. Sit around and move north here past this 127.11.12. So what we want to do here is, and that's on the long side. What we want to do here is just pay attention to what the U.S. stock market is doing and understand that that's going to be an area that we're going to have to, you know, use as a little bit of a fence on the long side, in my opinion. I'm not a big fan of going short these treasuries. I do not believe they're going to raise rates anytime soon, and that's the take on that. Let's take a look at gold. We've been saying this. The rhetoric hasn't changed, in my opinion. Gold's coming back down into these areas here. I fully believe gold's going to probably just continue to migrate down. Has it been something you've been able to hang on to and pull any shorts off lately? No. This 125.26 area is a big number. Obviously, 11.25.26 area up top is a big number. That's the daily up for high, and then that's also our big weekly number here. So, you know, from a long side, I would not like how this thing reversed off of these inflection points up top, 60, 68, came back down, and just now kind of did a little bit of a customary bounce off this area, or excuse me, a empathetic bounce, really coming back down into support really quick, 1 week up, 1 week down. That's not what you want to see, really, from the long side. And if we start getting below this 11.25 area, and again, getting below it, I always say that, and you're like, well, you know, where's my trigger point? Where do I feel okay about, you know, going short this product? You know, that's basic. I mean, you know, we've got a zillion automated systems that we've run and monitor. And we've got different, you know, historically different things work in different times, but they work, some of them work on different products. You know, a lot of commodities are their own animal. And, you know, the same, you know, if you can find a system that works, you know, religiously on every product in the world, please let me know about that. A lot of times you'll have to kind of factor in the so-called VIX component, if you will, of a certain animal. I mean, you know, IBM trades a lot different than a $5 stock. There's different folks trading $5 stocks out there. I mean, there's a lot of automated systems that are just trying to do the bid offer thing on an active. So what I'm trying to say is, when I say, when we get back down below 1125, I'm going to look at picking battles myself on the short side. If we can get closes just like we did the other day down here, and then my initial target's 1114, and then ultimately the targets are our weekly unfair lows, which are at 1086. Okay, if that makes sense on gold. All right, the other instruments I think we need to pay attention to, and are we in? Let me pull this up here really quick. December silver, and the reason I'm just not really excited about gold. I mean, this is not a total tandem trade, but 1460 on the December contract. That's getting back down below there. We're not a lot of direction here on silver. I don't see any reasons whatsoever at this stage to step in big time on the long side, but you do have an inflection point to pay attention to at 1460, and we are above that inflection point. We've kind of gone below and come back up. So you could make a case, all things considered, and also looking at the divergence here. So this is really important. Lower lows, higher lows in Navigator on a long-term weekly scale. If you're considering looking at silver from the long side, you've got a little bit of a reason there right now to use that as a little bit of a fence. Give yourself some noise down below. Try to hang in there. Maybe meet 15, 23, 24 up top as an initial target. But again, I just don't see yet. I mean, if we get above 15, 23, 24, then I'm going to start changing my tune, and then I'm going to start looking at this down below as, that's not a bad situation to possibly start picking some longs. But the way gold's sitting down, silver's just kind of not wanting to get away from this area. I think we could have some more downdraft before we reverse on this product. Okay, so that's my take on silver. All right, let's look at December copper, and thanks for pointing that out. Let me get the right month code up here. Every time we have this machine rebooting all the time, by the way, automatically. We have a scheduler that reboots it, and it doesn't save it sometimes. So I'm going to do this, and I apologize for that. All right, so December copper, here's the situation. Now, this is our long-term weekly. Now you've got a chance here, and I'm going to pull up our scanner in a second and show you this in the scanner. And let me make sure I get that up. Nobody liked the UFC concept for relatives coming over. Thought I'd get more of a reaction on that one. All right, so copper here. The yellow orange bar. If you're colorblind, it's yellow. Just kidding, it's yellow. The yellow orange bar appearing now on the weekly. Today's Thursday. That means we're more than likely going to get a new profile to focus on here for next week. That in itself is a little bit of a target situation for shorts, and it may be a reversal pattern on the long term. Now, here's the daily. You would love to see this thing, and again, this could just be like, let's get back. I mean, as you've seen, if you go back in time in copper, as soon as we started breaking down, we use these profiles to leverage, when we can, based on Vega being green. This is our Vega indicator, by the way. It's basically a profile-related type guidance system. But, as we are getting up into the top of the profile again, you've got that long-term orange bar, yellow bar attempting to appear. Top of this box is 2.3856. I would like to see a daily close up there, and then look at this kind of like we looked at crude oil. Close above, look for the retracement, put stops in, play defense, and boom, let's see where this thing can ride to. And where it can ride to will probably be based on a new profile appearing here on our long term on copper. So, I don't know where this profile is going to output. Again, the inventor of, I can't tell you ahead of time because we need to see what this thing's looking at on a Friday close, but we might have some decent targets, initial targets on that long move up. But so what I'm a fan of right now is, based on everything that we've talked about, you've got to be willing to temper some of the shorts now that you've had on copper since we had this breakdown. Do I feel like it's time to get long this thing in a big way yet? No, I don't. Yeah, I mean, and if you missed that buy on copper, so to speak, it was a little bit of a risky trade, as you know. But right now, I think just to really get the risk reward situation right, I think it's a possible kind of wait and see right now. Well, you know what, John, in Philadelphia, you've been right as rain before, especially on those longs on November soybeans a while back. I mean, that was about $1 a bushel move that you pre-predicted, I will say. Let's take a look at copper on the scanner. See how that peel back is happening there? And we're just barely sticking our neck above. See that one? That means that this is the first hint, but I want to see a daily close up there. And here's the situation. I mean, we just are barely, I would call that a noise factor, but the cool thing is the cool thing is the scanner's kind of, if you want to, let's just say, you could set up your watch list in here. We've got a really cool version coming out tomorrow in this, a new upgrade. But if we want to see new boxes attempting to appear on the weekly, it's going to put it right in your face. And you can also, while we're on the topic of the scanner, you can come in here, which is really cool. And we're putting some quick edit features in here to help people. Let me get to the right stage. Edit list. All right. And we're looking at test one. All right. So I can come in here and build a list, edit a list, and I can place the usual suspects that I like to look at all in a grid, and it's going to let me know visually when things are changing like that, which is kind of cool, I think. All right, so let me get back to the dashboard here. Let me get this out of the way. All right, so we got about 40 seconds here before we go to the first break. I'm going to go back to crude oil for a second here. Caught a nice little pullback bounce yesterday in this, but really interesting is the profiles appeared well below. That's bullish in nature. So what we talked about yesterday is we could go back and, we're kind of, you need to put some trailing stops in more than likely based on your appetite for risk. This thing could absolutely come back down to 43.38, but I think we're probably looking at, all things considered, get back into the 49 area. But right now, we're going to explore this a little bit more when we come back. This is our 240.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Looking at crude oil, trying to finish up with this. As you can see, this 240 here, bottom of our profile, this is kind of stepping down to lower term time frames. The weekly we looked at, the daily we looked at that bounce point. But now this is, I like how this is acting actually. This is very, very indicative of another move up, by the way. So if we get back up into this above 46, 47 now, we'll probably have some people covering. If I was short, I would be concerned right now. And you know, when you have, as Tom would say, building Kais, I kind of look at it as troops on the border here. They're kind of building, and you know, when the troops find a hole there, they can move relatively quick. So again, this doesn't have to go north, but I like how this is acting. We met some initial targets on a shorter term time frame. It looks like we're spinning, sitting on the launching pad, so to speak. All right. So I'll tell you what, let's look at one more little situation we got to get into here. Man, I can't, don't tell me this has changed around again. Okay, here we go. All right, so big number for the dollar, still 95.30, stay above, nothing really changing there. This is the situation on the dollar. And we're going to quickly get into, take a look at the DAX here. Remember, no matter what the S&Ps are doing, this is kind of the Maginot line for the DAX, 10,395. That's where you got to call it quits on the short side on that one, and that's really, really still indicative also of the unfair highs on the 240. Let's look at the S&Ps. This is something that we talked about, you know, waiting patiently until 1945, 1948 was hit for the next time we could really start looking at this from the short side. Yesterday, again, obviously, and again, I'm going to blow this up so you can see it, obviously had a relatively large move up, and then in the close, we want to, higher. This is our 240 here. So what do we do now? I've looked at this and personally picked a battle here, got stopped out. Now the deal is you have to wait. All right. You have to wait until we breach some borders on the south side or come up into new resistance on the north side. Right. And what does that mean? The good news is actually that you don't have any indications of new profiles appearing here on the weekly or the daily. Here's the situation here. You had the profile appear well above. And, things like this are going to happen. And just like we looked at this situation here, as we're trying to find resistance areas to short this particular market. And why are we doing that? Because as we go into the scanner, we look at our breadth situations. We're still really, really imbalanced on the south side here and not showing a lot of hints, I might add. Again, some 60-minute crossovers that happened yesterday, around lunchtime, gave you that confirmation. This is a system in itself. Remember that. 60-minute crossovers on breadth that happened yesterday afternoon. And we've been short since August 31. And then, actually, you can get this figured out yourself. If you get this scanner, you can play around with it. But right now, the long-term breadth is still negative. So we're still looking for resistance areas when we can to try to, hammer this thing a little bit. And we talked about, this thing can actually go, it can go up. So, you got to be prepared, put the stops in. You don't want this thing to get away from you. And then if it goes up a certain amount and conditions start changing, it can actually go higher. There's no guarantees that this thing is going to continue to, to spin around down here. But I like how this, I was thinking we were going to have some form of a flag sitting a little bit lower, but now it looks like we might, again, just kind of consolidate, volatility will contract, and then we'll have another newsworthy situation that may bring the volatility back in a massive way, and that'll create some trading opportunities. Aussie dollar, no end in sight. Not time to buy this thing. Here's the 240 unfair lows. Looks like we're crowding the bottom here and getting ready to bust through again. Remember, this thing can go to 50. It really, doesn't have to have a backstop in place. We're going to take a look at the ruble really quick, and we're going to get into some stocks after the half hour. I know you guys want to get into that, but again, this is one that we've been talking about. There's zero reasons to really take off the long-term trade. And here's the regulation happening here. Next move up 71. And we've been talking about this since the breakout around 52. And that's 2,000 pips ago, basically, in a nutshell. And there's the reasons. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances.
Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Got the scanner up right now. But you know what I was thinking earlier today? And we finished up with the ruble. Well, who cares about that? But it's been a great trade. 2,000 pips without looking back. And for long-term investors, this is really, I'm going to pull up the scanner one more time. I'm going to go to my Forex section. And we're going to look for ruble USD. All right. So as you can see, and I'm sorry, let me go to the USD ruble. Hold on. Why do we not have it? All right, well, let me look into that. It says we've been in a long trend 7 bars. I don't know why that says that, but it gives the inflection points that we're sitting at right now. And the scanner is going to give you the peel back areas before the charts do. And right now, the inflection points to pay attention to is 64, 42, 43, and the ruble stops below there right now to continue the long trade. But let me do this. I wanted to let me make a note of something here to one of my tech guys. I wanted to kind of run through the Dow 30. I know, the Dow is in my opinion not the most indicative index out there of what's going on in the U.S. economy. It's a couple of big names kind of run the show with this index. We're going to just kind of run down the list really quick because I know a lot of you guys have this in your portfolio, have these stocks in your portfolio, or monitor them. We're going to take a look at 3M. The stock's actually I'm sorry, I'm having technical problems here. This stock's been showing some hints of forming a new profile here. Obviously, the market's rallied. I want to take a look at this. Get something changed here. I want to take a look at this relative to what you should do with it now. I mean, you know, the sad news is for this stock, it's been an underperformer as the market's gone sideways. It's gone south. So this is one I don't know. I mean, obviously you can get some serious snapbacks in stocks and equities or instruments that are down relative to the market, and just kind of blow some people's heads off pretty quick. Having some technical difficulties. Sorry, guys. But when you look at this particular stock, you've got better opportunities to go long. So I'm just going to keep plowing through the Dow 30. Remember, if you're trying to pick a bottom on it, stops below 135.5 on 3M right now. Let's take a look at AXP. The situation here, again, you know, obviously a little reactive towards the market here, but 77.23. I think this stock could go. You know, I'm not a big fan of going long the financials right now. 77.23 hasn't acted super bad, but you know, kind of showed itself recently, especially this past week. And you got 77.23 combined with 77.68. The Orient stops on the short side for this particular stock. It's about unchanged for the year, really. Let's take a look at Apple. We talked about waiting on this one. There's really not a lot of direction. We're going to have a new profile probably appear on the long-term side on the weekly next week. And why do we know that? We're going to go into our dashboard and we're going to look at Apple. And if you see that peel back happening there on the ruble, that's a hint of one. I just want to revisit that. But Apple, this is more than likely going to lock into force over the weekend, and you're going to have a new profile appearing on Monday. So you're going to have some new situations on Apple. This is our daily to focus on. This is our weekly. So we're more than likely going to have a new profile here, new inflection points, in my opinion, to short against or to sell breakouts. And technically speaking, you know, Apple really kind of started showing its hand a little early, and I think we've got some more downside to this. But right now, kind of in no man's land, got a number around 110, 117 and 65 and 102.26 below. But right now, not a lot of leverage here to trade this one way or the other. And I think the market's waiting for some more news to come out, period. Boeing. Going to take a look at Boeing. Here's the situation on Boeing. Had a pretty good rally yesterday afternoon. I think we finished around 131, or it's actually 131.10 this morning. That's where we're opening. A little bit of a reversal. Do I like Boeing? Do I like to buy it here? No, I do not. Profiles above, breakdowns have happened. I think you got another shorting opportunity, 134.96. Let's just call it 135. Stops above there. And why am I looking at all these stocks from the short side? Because my thoughts are the tone of the market, the tide of the market. We're still going to have some downside. Even though we're up this morning, we're still going to have some downside pressure on the market in general. And a lot of these stocks, therefore, in my opinion, should be looked at, you know, from the beta standpoint at the very least, that they might actually get dragged down also. So, you know, and a lot of these stocks, I'm not looking at a lot of stocks in the Dow as strong stocks so far in the first 5 that we've looked at. Here's Caterpillar. Again, you guys know the story here. Very, you know, has been to some degree a two-pronged sword here with global slowdown happening, so to speak. China's kind of verified that lately. And then you've also had a dollar situation for the multinational. Right now, you got an inflection point to pay attention to down below here. I'm going to pull up Caterpillar in the scanner. I'm going to go down to CAT right here. And as you can see, we're sitting right at the bottom of our profile. This is real time right here. We're coming back up into that bottom. And we've actually got 2 inflection points on top of each other right here. So that's why that's showing that. But as we look at this, I'm going to go back to my charts here. As we look at this, and this is this is a good example here. You don't see a blue line. You actually see that on the scanner. It actually overwrote the green line there. But when you see this is very, very non-directional at best. There's not a lot of people clamoring to get to Caterpillar, long side or short side here. So I think the smarter play on Caterpillar based on that is, 80.39 would be a new shorting area for this stock. And if we stay below 76.17 down here as the market rallies, I think you could actually take a shot even lower here at 76.17. All right, so Chevron, let's take a look at that one. Again, we're going over some Dow stocks that might be in folks' portfolio, just to give a little quick analysis here. Interesting situation on Chevron. Obviously an XLE situation. You know what the deal is there. New profile attempting to appear, probably going to have some new inflection points. Not a big fan of continuing to short this sector, actually. So I'm looking at Chevron, and again, it's kind of held true here right off that bottom of the profile there. But, Chevron will be a situation of this. I think it could be possibly time. Remember, this is a $140 stock not too long ago. I think it might be time to look at this as leveraging some longs off of a new profile low. Stops down below there. I think Chevron and a couple of other oil stocks are going to possibly, do some form of a move up here. And I don't think it's a long-term play, but I think shorting these things, that game might be over for a while. Let's take a look at Coca-Cola. Coca-Cola, again, all these stocks have broken down. Stops above 40 on this one, in my opinion. Again, I think the market's going to drag down a lot. Okay, profiles above, the drill there. And again, not the best long opportunity out there, in my opinion, especially in this environment. Disney, let's take a look at this crazy situation. Again, wow, new profiles appearing. Don't do anything till next week on this one. You'll have some much better inflection points to pay attention to, even though we're starting to show, troops on the border kind of situation spinning around here. Possibly will break back up. But remember, guys, this stock got just dismantled recently. We bounced off the lows significantly. New profiles appearing next week. We're going to have some more areas of resistance to look at from the sell side. This is not over. And Disney's woes haven't been corrected. Let's take a look at DuPont. Again, we're going down the Dow. If you guys are joining us late, we're going down some Dow stocks, doing some quick analysis here. Again, DuPont, wow. All right, new profile attempting to appear. You got that in the scanner. Where is DuPont? See that? Peel back. First time we've had a new profile in a while. That's basically a target-rich environment, at least for shorts. This is just a bad situation, right? So, again, you've got some reasons to take off the short trade here, and you had, this is one of those stocks that we picked out early, and I want you to kind of look at how this works out. When the market, and this is our weekly, so back in March of 2015, this year, we had the breakdowns below profiles. We went back and retested that. And this was at bare minimum, not a long candidate. If you were looking for stocks that were starting to show their hand early, this is one of them. And now, first time since, and let me just, all things considered, since March, we've got a new long-term profile appearing. So what do you do with this now? Here's our daily. Again, using the daily to regulate the trade down. And again, the scanner picks these out first. This is a weak stock in a market that went sideways at best, and the market's going down, and it's actually cooperating. And if you look at this action, it's not wanting to get out of its own way again. So if you're going to try to bottom fish on this one, wait till next week. Again, I'm not a big fan. I'm looking for more resistance areas to kind of pile into the shorts on this one with. And I know you think that's crazy. We've come down from 75 pretty quickly. The stock's been cut by 33%. All I'll say is things on their lows go lower, things on their highs go higher. And remember 2008, anything can happen. And the other good news is is if you want to start nibbling on the long side with this, let a profile appear and let it clear and clean it. Clean and clear, whatever that saying is. Let it get back above those profiles, and then you've got something to lean on the long side. Okay, let's keep hitting them. ExxonMobil. These are Dow stocks. We're doing some quick analysis if you're joining us late. All right. Not a big fan of going short oil stocks or oil right now until we're, have some clarification on crude oil in general. New profile going to appear on ExxonMobil. Obviously, extremely in love with the rally in crude oil that happened recently. And, looking a little bit better than it normally has. ExxonMobil has been an underperformer, and actually in the XLE was one to sell. And I'll go back with this. When we had the rally back in March in crude oil, it actually started in March. ExxonMobil couldn't even clear its own unfair highs on our long term. And we were looking at this is one of the weak oil stocks to sell. And believe it or not, that's still the case. So what we want to look at here is new profiles appearing and maybe getting above those profiles to start nibbling on ExxonMobil. General Electric. All right. I can't remember what the dividend is on this one still. Are we still north of 2% dividend on this? Maybe somebody can tell me that. But, obviously, sitting below profiles. We talked about this. The scanner was pointing this out as the market was still not, in full-blown correction mode yet. But 26.21, the big line there. But, taking a look at this, again, I still think the market's going to continue to head south. Any rallies up to 26.21, 24 have to be sold. Any breakdowns below 23.49 have to be sold. Is there a little bit of a floor for you guys who want to try to pick this up to some degree on sale, I guess? Yeah, stops below 23.49. You got to say uncle below there. Remember, this thing can get into the $20 range. And if you remember 2008, I think this thing got to, what was it? Maybe somebody can point out the low price there. It was amazing how cheap this thing was. Goldman Sachs, another Dow 30 stock. How did they let this company in the Dow 30? I do not know. We got some bounces here we talked about before, and a strong ETF as we came down in support, and then the breakdown obviously happened even a little bit early on Goldman Sachs and some of these bank stocks. 204.28. No new profile attempting to appear down here. This is really, really bearish for this stock, and I'm still bearish on the financials. This is not one to try to pick up on sale right now. I don't think they're going to raise rates. That yield curve is going to stay flat. Banks do not like that. They had already forecasted in a long time ago that they were going to ultimately raise rates. That's what all this fluff is here. They got really, really excited about ripping people off more at the bank, being you. And right now we're going to have to take a break, and we'll come back and finish up with Goldman Sachs.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Going to look at the S&Ps really quick. We were going over as many Dow 30 stocks as we could just to try to cover that. That's not going to happen to finish that. S&Ps, this is why we wait. This is why we wait for confirmations. This is why we don't short blindly before any type of news-related reports also. Talked about 1947, 1945. That's the 45. That's the 47. This is our 240s. We need to get back down below that area to start looking at this from the short side. And if it never happens, it never happens, you know. But one of the things that we try to pay attention to is what's the you know, how do we block out one side of the marketplace? We're looking at trying to trade with the so-called leverage of the trend or the balance or imbalance of the marketplace. And right now in the long term, it's still looking relatively ugly. And all these stocks haven't opened, so some of these speed dials here on the short term aren't going to be exactly where they need to be, but we'll know that pretty soon in about 30 minutes. So one of the things about the S&P is, you know, markets don't have to make sense. They don't have to do what you think they should do. And these confirmations are super important. And right now, being up in the ether and trading between 50 and 70, you know, holidays coming. There's a lot of wacky things that are going to happen. It doesn't have to make sense, and going higher and higher right now, as far as the internals are concerned, being disconnected with those moves up. And again, we've got some stocks open and some things adjusting here, but again, I think the long term, as you can see, here's the daily profile appearing above, all that kind of jazz. It's not something to buy, in my opinion, but it's something to wait to look at the short. And I've dragged that out as long as I can. All right, let's take a look at a couple other things. We got about 2 minutes here. So again, just to reaffirm, if you guys are joining us late, December gold, not a big fan of going long this. Now we're starting to break down below this 1125, 1126, 27 area. I'm okay with this now. Stops above that area. Drifting lower, 1114, first stop, next stop down, 1086. We got a little bit of a trading opportunities here lately, but right now, I think gold's going to settle back. Some people are going to give up on it, and we may have some momentum on the downside. Crude oil, we're going to probably spin around here a little bit. Got a nice little bounce yesterday. I like how there's a profile appearing below, and I talked about this morning already. This is our 240. I like how we got the troops on the border here. We may have a pop above 46, 47, and may end up running up into 49 again. But right now, if you're short-term traders, I'd wait on that. Long-term guys, I still think you can just kind of hang on to this, let it spin around, and stops below around 43.5. I know that's a big safe landing area down below, but if you're trading this from the long term and trying to see 49, that's about a 1-to-1 risk reward ratio. And if you caught yesterday's show, you maybe caught a good bounce there, period. Let's take a look at one more thing before we go. 10-year, not been a fan of going short this. At the end, I think you just brace your stops below 127.11 based on your appetite for risk, maybe below 127, period, and let this thing do what it's going to do on the upside. Here's the long term on the December notes. And again, I know we've had a good run. I don't think they're raising rates. That's the situation there. XLF, just to hit this one before we leave. A little bit of a bounce situation here. There's a little bit of a floor at 2261. If we start breaching that, I think the all-out short scene is on again for the financials. Guys, you've been great. We'll pick it back up again tomorrow. Larry's next. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.